Lost about $60 billion in market value on the New York Stock Exchange. Gigantic loss.
Traders were already worried about rioting in Greece and concerns about a growing financial crisis there. But then came what appeared to be a trading error. An order to sell $16 million in stock was entered as $16 billion. That triggered a big sell-off in Procter & Gamble, the maker of Ivory soap and other household products. That caused the Dow Jones Industrial Average to plunge almost 1,000 points. Procter & Gamble is part of that index. Circuit breakers designed to halt massive swings didn't engage.
Apparently this fall today just failed to trip them. The amount of the loss didn't quite trip the circuit breaker. The timing of the loss did not quite trip the circuit breaker.
Ed Osborne is a wealth manager at the investment firm of Bingham, Osborne in Scarborough. Once the mistake was identified, the market bounced back, regaining about two-thirds of the sharp drop. But the situation in Greece remains a drag on the stock market. Business leaders gathered in San Jose today expressed concern that a weaker European economy will hurt U.S. exports.
If that economy weakens, then our exports from the United States to those countries begin to get more expensive. So the corporations in the United States might see eroding margins and reduced profits because with our stronger currency, it becomes more expensive for those economies to purchase our goods.
Whether it's Greece or a trading error, analysts say today shows a lack of confidence in the economy. And if consumers lack confidence, it could impact spending and the recovery.
If it's a quick bounce and confidence is resumed, won't be much of an impact. But if, in fact, the markets stay way down for an extended period, then sure, that would have an impact on consumer confidence and on consumer spending.
So, was there a trading glitch? While we wait for investigators to come up with their answer, it's interesting to note that the NASDAQ has now canceled many of those trades that occurred during that 20-minute chaotic period when the market was melting down. But the New York Exchange, meantime, says that none of the errors occurred on their exchange. Therefore, they're not touching any of the trades that were conducted during the meltdown. They are not taking any responsibility for that. In San Jose, David Louie, ABC 7 Money Scope.